Keeping an eye on this disconnect between the S&P 500 in the blue and copper in the red, we can see that generally copper prices move in the same direction as the S&P 500. But lately, there's been a disconnect. As we can see, we may be getting to a point where QE is still propping up paper assets, but not propping up economies, as copper is so sensitive to growth in areas such as China and Europe. CyberTradingUniversity.com came out with an interesting article about this issue recently. They pointed out how copper prices peaked more than a year before the stock market peaked in 2007 and bottomed a couple of months before stock prices bottomed in 2009. So if copper is going to continue its excellent track record of being a leading indicator of the S&P 500, there's certainly an alert to be watched right here. Does this mean that now is the time to short the heck out of the S&P 500? Certainly not if you're a trader, because traders are going to follow the trend, and we can see that the S&P 500 is doing a good job of staying above that 50-day moving average. It's just something to watch out for. Don't get caught. Be ready to short if we see the S&P 500 begin to weaken and fail this 50-day moving average, and keep an eye on copper. There should be some type of reversion here eventually, where either copper rebounds or paper assets like the S&P 500 drop down to meet that copper level.